Our focus now on the show is one of the biggest stories of this week. Nigeria's annual inflation rate rose for the 9th consecutive month to 12.4% in May from 12.34% in April. This represents the highest inflation rate in 25 months since April 2018. Nigerian's Bureau of Statistics disclosed this in its Consumer Price Index report for May 2020. This is 0.06 percentage points higher than the rates recorded in April 2020. On a month-on-month basis, the headline index increased by 1.17% in May 2020. This is 0.15 percentage points higher than the rate recorded in the month of April. The NBS report further showed that food inflation rose by 1 basis point to 15.04% year-on-year from 15.03% in April 2020. For urban inflation, which rose by 2 basis points to 13.03% year-on-year, the rural index also rose by 1.16% in May 2020. Joining me now live via Skype is the Managing Director of Afrinvest Securities, Mr. Ayodeji Ebo. He is in Bagada, Lagos, to discuss more on the implication of this new inflation figures amidst the current macroeconomic indices. Thank you very much for your time, Mr. Ebo.
Thank you for having me.
Let's start with this figure. I see increase in almost all facets, all sectors. That's what is coming in now, and is even the highest in 24 months. How does this come to you? Were you expecting this 12.4 from 12.34?
Yeah, thanks for that valid question. It's very obvious that on the back of the COVID-19 pandemic, there's been pressure on all the sectors. So regarding doing business, and also the demand has also increased. So specifically looking at the inflation rate at 12.4%, I think it's even a little bit below our expectation. And our reasons are, if you look at the rate at which food prices have also increased due to some of the, which I'll call transportation bottlenecks. So we've seen, because of the interstate lockdown, though the government is not really placing restriction on movement of food produce, but we all know how challenging it can be. Cost of transportation has increased. So if you take that item, you would expect that that would be a major pressure point on headline inflation. So the increase we are seeing, or let me say the marginal increase that we saw in May, can also be linked to the month-on-month reduction we saw in core inflation. And in the interesting thing that I would like to point out regarding that is that has not really captured the illiquidity in FX that we're seeing within that segment. Once we begin to see that impact, we're all aware of the depreciation of the Naira. If we compare the rate to where it was in April, it has significantly depreciated. So once we begin to see that impact, most of the traders have not been able to import. And once we begin to see the importation of goods, and that would also reflect on prices. So going forward, to focus on going forward, there are a lot of pressure points that we expect would impact inflation. And the first one would be the implementation of electricity tariff, which is expected to kick off 1st of July. That is a major cost to a lot of items across the sector in Nigeria. Secondly, we were all also aware that there's still a lot of illiquidity in the FX market. We expect to see that major shift, major adjustment. The CBN is trying to see how they want to converge the Naira. So by the time they converge based on what is happening at the high and E window and based on what is happening in the parallel market, would expect to see a major increase in prices. The VAT implementation too is also a major pressure point. So when you when you add all these impacts, if you check all these impacts, will have major impact on headline inflation, either coming through food inflation or coming through core inflation. So by and large, it's not really looking pretty, especially for investors. You are aware that based on the result of the primary market auction for Treasury bills yesterday, 364-day instrument closed below 4%, around 3.9%, while 91 and 182 closed around 2%. So for most investors investing in the fixed income markets, their real return is negative. Investors will need to take more risk if you want to, for them to be able to close that gap between inflation rate and the return they get on their investment, trying to look at other forms of alternative investment.
Wow, this is really worrisome. 3%, and they're talking about 2% for 192 days. That's talking about treasury bills. That remains not attractive at this time if we had to look at it. Mr. Ebo, I'd like you to react to, you talked on the Forex thing and talking about when importation would start and all of that. Now, what do you make of the efforts by the Central Bank of Nigeria? How well can they support this market? They've been doing this before now, but at the moment, I think it's getting out of hand, if I can use that word.
Yeah, thank you. What we've been hearing a lot of assurances from the CBN, trying to reassure investors that they will definitely supply. But based on market feelers, because sometimes we try to also discuss with the users of the FX, and we'll interact with them, just not based on what is on the faces of newspaper. A lot of them are not being allotted. So when they apply at the auction, sometimes you get about 5 to 10% of what you need. So it means you need to look at other markets for you to fund. Then we also need to be very careful the way we are also treating the foreign investors. We can see FDI has thinned out significantly, just about $240 million. If you look at the FPI that we've been relying on, part of what made them return to the market in 2016 was the setup of the I&E window and the assurance by the CBN that they will provide liquidity in that market. Now, for most of the foreign investors, they are currently being trapped. A lot of them are indirectly rolling over because they don't have any other option. They are still waiting for CBN to supply these dollars. Even for the equities, the interest we saw last month, for some of them, based on the fund they received from dividend, rather than continue to wait, they also took some position. So I believe that if we don't act very soon, eventually, even after we adjust and the foreign investors leave this market, it may take time for us, take a lot of road shows for us to be able to convince them to come back to our market. So it's very important that we have to act now. Clarity is better for business. So for most people that even import, they are wary of buying dollar at 450 or 460 in the market, and by the time they import, by the time they are paying their suppliers, rates might have moved against them. So if we don't provide clarity in this market, trade is a major sector, a major employer of labor in this, and constitute a major part of the informal sector. If we don't provide clarity, if we want to move the Naira to 500, let's move it fast to 500, and everyone will know to work and project with 500. You count your losses and you move on. Clarity is critical. If we don't provide this clarity, so I'm not saying giving a projection that CBN should move to 500. What my emphasis now is that we need to provide a clarity on where the Naira would settle so that businesses can kick off, people can, there can be liquidity in this market, and the arbitrage that you see between the CBN rate, the I&A window, and the parallel market can converge like what we had in the last, when you check the trend last year. So there was no incentive for people to buy from the bank to go and sell in the market. And you know, remittances is also very critical, about $25 billion if you check annually. Most of them will begin to channel it through the unofficial market once they see that that rate is very significant. And that would also affect liquidity on the part of the CBN. So in summary, what I'm emphasizing now is that we need to provide clarity.
Yeah.
Let's see what rates the Naira will settle so that businesses can open up and transactions can kick off.
Very important one there, clarity. That's very important at this time. Mr. Ayo, it should be noted that the latest increase in inflation also means that the purchasing power of consumers to buy goods has deteriorated. Now let's look at the man on the street now, minimum wage and all of that. Look at what is happening, salary cuts here and there, and even job losses. What happens to the man on the street at this time?
Yeah, it's sadly, it means that your purchasing power has reduced, cost of living has gone up, which you also, if you want to also tie it, it means your standard of living is going down. Putting it into perspective, so it means a lot of some of the goods that were going for 1,000 Naira last year, now is going for around 1,112 Naira. So the number of those goods that you can buy has now reduced. If you used to use 4 tins of milk in a week, it means that you may not, based on, because if your salary is not going up and you don't have other sources of revenue, it means that what you'll be able to purchase would continue to dwindle on a month-on-month basis. It's really a tough one, and that is why the implementation of the Economic Sustainability Report, though funding is a major concern, we need to see how we want to kick that in to be able to reduce that impact. When you check that report, there's going to be focus on agriculture, focus on construction. All those sectors will generate significant jobs. And once activities can pick up, there's a way we would begin to see that impact in the economy. The government angle, minimum wage, fine. When you check government, though, when you look at the budget, you can say when you analyze personnel costs, government spend close to 30 to 40% of revenue on less than 2% of the population. That's one argument. But how can we sensitize the informal sector that accounts for about 70% of employment? We need to see the intervention fund, we need to intensify efforts. We need to, monitoring has to also be done. And as we progress and continue to intensify efforts, especially in agri, so that we can reduce the importation and create jobs here with those as we continue to improve on our produce, then we will see improvements in the economy overall, and standard of living can improve. And we would even see food inflation will come down once we are able to see more increase in production in the agri space. So there will be less impact on inflation.
Mr. Ebo, before I let you go, you've touched on that spending plan, the 2020 spending plan. Very important document. That reactions have been trailing since the revision, talking about the Senate and the House of Reps. Now, the issue of debt servicing comes to my mind. How does that come to you in 60 seconds as we round off this interview?
It's really concerning and alarming because based on the report from the Budget Office that against about 590 billion that was realized actual revenue, about 543 billion was spent on debt servicing, which is about almost 90%, if not almost 95% of the total revenue. It means that all the funding that is being raised by the government, or that was raised by the government in Q1, was used to fund recurrent expenditure. A major part of it was used to fund recurrent expenditure. If you look at the actual implementation of capital expenditure, is really very, very minimal. So, and it's the implementation of capital expenditure that will help grow the economy. So strategy needs to change. Private sector investments, we need to focus more on that so that we can move faster and achieve that projected growth that we're all looking at.
Mr. Ayodeji Ebo is the Managing Director of Afrinvest Securities. Thank you very much for your time. It's always a pleasure having you on the show.